So we got the second intraday 5% drawdown yesterday. It wasn't on the closing basis. So we do still see the overall resilience that has come to define this market and this rally. But should you be buying it now, or should you wait for more questions to be answered? Let's ask TJM, Institutional Services Director Jim Market Gauge Group Managing Director Michelle Snyder, and Gibbs Wealth Management's Aaron Gibbs. All right, let's begin with the sources of anxiety. We'll start with Evergrande. Will it be a footnote in history, or will it be something more debilitating for the global markets, Aaron?
So I'm considering a footnote. I think what investors were surprised by is that the Chinese government would even consider letting it go into default, which is a bit of a surprise. But I think the Chinese government has so much control over its markets and its economy, and they desperately need to achieve economic growth and create stability, that they may let this one company default, but they're not going to let it roll and create a massive avalanche.
Jim?
I think this marks about the 300th time we've spotted the next Lehman Brothers over the last 13 years, and I think it's mostly nonsense. So I think my answer is hybrid. Yeah, it could end up being a big deal, but right now I think the market is using it as an excuse. The fact that we were just grinding every day to all-time highs for such a long time, that's the thing that's most unusual. These move backs are what's more normal. So I think it was the straw that broke the camel's back. I think the FOMC and the potential for taper is a bigger deal, but I sold the pop a bit today. I still plan on having a 7.5% correction in the S&P, perhaps 11% in the NASDAQ. And not only is it normal, I think it's a good thing.
And by the way, so Jim, you're saying that has begun. This is not a head fake. That pullback you've been looking for, it's already begun now.
Okay, I'm not putting every chip on that square, but I think it has. I had some hedges on that I liked. I've entered some short positions too. I'm not banking everything on that, but yes, I believe it has.
Michelle?
I'm sorry in advance because I'm having a little audio issues, but just to jump on what was just said, there is one big concern if they cannot roll this out, some feasible solution in China, and that is to the raw materials, particularly those that are used for construction and infrastructure, copper, steel, wood. That would actually really affect the imports that we do into China, and that would, of course, be a factor for our economy. So that's one way it could roll. And, of course, the other way it could roll is if they do resolve the issue and consumption starts to rise again on those raw materials, then it can turn out to be deflationary. So there definitely is an impact. It's just going to take time to see which way it goes and how it sorts out.
Well, I hope we don't have to wait every session before we get a clear direction. You know, of course, meanwhile, history shows that higher taxes, as it becomes sort of conventional wisdom, we're going to get higher taxes. The market starts to react by going down. I mean, we saw the inverse of this with the tax cuts, where the market rallied into those tax cuts. So I'll come back to you, Jim, on this one. Higher taxes, $1 trillion spending, the debt ceiling debate. How much is that impacting this market?
I think that's a bigger deal than Evergrande. I think if you step back and look at the role the Fed's played over the last, let's call it even 35 years, they are the enabler of poor federal government policy. And they've been able to do that for so long because there wasn't the hint of inflation. Now there is. The back's up against the wall. The responsible thing for the Fed to do is to step back and let them and not paper over the problems from the federal government. And I hope that they do that. Realistically, they'll probably fold their hands as they've done in the past if the stock market starts to crumble. But these are some horrible policies, and I hope the Fed doesn't prop up the economy with cheap money to compensate.
Some would say it's been a long time since responsible and Federal Reserve were used in the same sentence. Aaron, what's the biggest risk to this rally?
So I think, if you kind of divide it up between political risk or interest rate, credit risk, all of these fears, and just, shutting down the economy again, I think political risk, just irresponsible fiscal policy, is probably the biggest risk. I don't think it's very probable that it's going to take the market down. I think this is something that would be more of a short-term, just a small reaction, and then we'll be able to figure it out, and American optimism will recover, and ultimately the economy will do well. But I do see that as the near term. Right now, I think it's definitely the biggest risk out there.
So, Michelle, I want you to put on your technical hat. You wear a lot of different hats. I was checking out the action this morning. It looked really like it was going to be a huge session. The S&P stalled right around 4:40 a.m. at 43.95. When the market started trading, the high today, 43.94, and it's crumbled from there. I mean, what are you looking for technically before you think, okay, the worst is over now? Okay, we don't have Michelle. Let me switch that. I don't know, Jim, if you use technical analysis. If you do, are there some parameters you're looking for, including the moving average, 50-day moving average? What are you looking at?
Well, the technicals I'm looking for, too. To me, it definitely the momentum looks lower now, and we needed to go back above 4,400 and settle there before I believe that this is over, and I don't believe it's over. I think we came back up most of the way to where we fell from, and to me, technically, that was just a normal kind of back and fill, and now I think the weakness still stays there. That's why I like that 42.25 area is that 7.5% pullback I talked about before, which is a bunch of other congestion from weeks and months ago. That's where I think my target is.
All right, so here's the thing. Aaron, I want to go to you about where do we go from here. You've been extraordinarily nimble. For the most part, you've been ahead of the crowd all year long. So where are you focused right now in this sort of market where people are starting to grasp for straws?
So I've been advocating more of what we call a barbell approach. So you invest in both your defensive and your value, as well as having some of your growth. Though I always like to take growth at a reasonable price, nothing too extraordinary. And so to kind of give you an example of what I'm looking at, I like Walmart on the defensive value side. The price has really taken a bit of a dip. It's trading below its 3-year average, but it's nice, stable growth. And then on the growth side, I really like Salesforce, CRM. Really, they are having a rough year this year, but we're looking at a full-on turnaround going in the next 2 years. And this is also a much more reasonable price that we've seen for the past 12 months. So that's what I'm talking about, barbell, having exposure to both sides of it.
Okay. By the way, with Salesforce, Mark Benioff, Wall Street loves him so much, that stock doesn't stay down long. And folks, CRM, that stock symbol, customer relationship management. Just thought I'd throw some trivia in there. Jim, I know you're looking for this pullback, but are there things that you're buying on the pullback?
Well, I am. I'm looking at some oil-related things. I think oil's holding up pretty good. And we've gone through this whole segment without mentioning the pandemic, and the numbers are getting decidedly better everywhere I look. So I think there could be some demand for crude. Also, healthcare, for obvious reasons, that's one of the only sectors I looked at today that looked reasonably good to me. Now, I'm going to say something I've never said before, and I'm also looking at places to get more into crypto. And before, I've just been a crypto investor, and I'm not one of those crazy diamond hands people like those nutty kids. But I do think that there might be some value there, particularly when I throw in the fact that gold and silver seems like dead money and has for months.
All right. Well, we got one of those nutty kids coming on later, Scott Meckler. So I'll pass that along to him. Jim, Aaron, and of course Michelle. Sorry you went down. Michelle, second time in a row I couldn't get to your stock ideas. Next time you're going first. All right, folks. Jerome Powell stepping into the spotlight.